We have the pre-opening rates kicking in just a second. Let's see whether we are able to get any advantage of the positive cues in Asia at this point in time, or whether crude will be a negative. Okay, at the moment it's just starting mildly in the red, but we'll wait by. It may not be that bad. Tech Mahindra is a stock you may want to watch with a buyback being announced at a fairly tall price for the stock. Okay, it starts with a 2% uptick. Yes Bank is starting 10% down. I seriously doubt this is the way it's going to play out. Of course, there are a lot of long positions sitting on that stock. Nevertheless, I don't know if the reprimand was that severe that people should take back too many negatives. It could be just a bit of long unwinding that you should see. The oil sensitives should have a negative start because we are seeing crude at almost $66.50. So that would be one set of negatives. But Dr. Reddy's starts 10% higher.
Yeah, and then, in general, I mean, if you look at the last 12-month chart for Dr. Reddy's, it has given good returns. It's gone from about 1,800 all the way to a high of 2,800. Of course, post that Bachupally unit issue coming up, the stock had a huge U-turn. But this morning, because of the relief at the Duvvada facility, the stock is up 10%, so keep an eye out on that. Tech Mahindra, on the back of that impending buyback, is up almost about 1.5%. And some of these two-wheeler names have been big gainers this month. So Eicher Motors, Bajaj Auto up about 10% for the month. Looks like there could be some more headway made this morning as well.
Yeah, I think a couple of other stocks which are interesting. Of course, ADAG stocks will have a good start, but let's see if that sustains or not. KPIT's tech, ever since that demerger, that has been struggling. And now I think 110 thereabout was the fair value for the stock. Now perhaps slipping even below that, but we'll find out. IDBI Bank is out of F&O ban, so that's been a weak stock. So that will be an interesting one to track. And of course...
He has started a little weaker. The dollar is 10 pice more expensive. That is to be expected because of crude. Not that the trade data was very good, but this is clearly a crude impact. And this could have an impact on bonds as well. Both imports will be expensive, as well crude per se will rub off a little bit on the bond markets as well. We'll let you know as soon as we get the first trade. Okay, first trade is 7.6. Okay. We've not seen 7.6 on the old 10-year for some time now, not after the rate cut. So that would be negative. Of course, what we haven't yet got a rate on that. Reuters is showing a rate of about 7.6.
Okay, so we'll keep an eye on that. It'll just pop up for you in a minute. Jet Airways is the other stock actually in focus. There's a rights issue that could happen of 4,000 crores. That stock is up almost about 10% right now. But Mr. Tulsian, I wanted your thoughts on Dr. Reddy's. It is a stock that has given returns to investors if you map a 12-month chart. Do you expect to see more relief because of the USFDA warning letter being removed from the Duvvada facility?
See, Sonia, definitely that this will have a positive effect, but maybe in fact the problem which I have been observing, if you take if you plot the chart for the new year of this calendar year, we have seen the low of, I think if I'm not wrong, about 1900 in the month of February, now having moved to a level of 2800, So I think that this kind of volatility is seen to be really hitting the investors a lot. And yes, maybe prices will move up, but whether it can sustain beyond 2700 or not is a question mark. But definitely this will be having a positive impact, and I won't be surprised to see the share moving up by 100 to 120 rupees from the current level.
Okay. Let's look at even Biocon actually, since there was news that its Bengaluru plant has got a clean chit. Mr. Tulsian, do you have any view on Biocon? Is it a stock that you would look at as a buy?
Lata, this is amongst the selected 3-4 stocks on which we have been keeping a positive bias. Biocon is one amongst them, along with Aurobindo Pharma. And yes, the facility of this oral dosage facility of the approval which has come, and even in the second case of also, I don't think that should be a big problem, because only 2 observations have come. And if you really see their biologic divisions, the second unit is part of that segment, is really doing quite well. In fact, the ramp up in their top line and the 30% EBIT margin which that segment is giving the company, is seen to be quite positive. So yes, this news, and in fact the stock having corrected in this last couple of days, maybe on a Friday, is also giving a good opportunity, because seem to be ruling at a lower end of the range.
Okay, Mr. Tulsian, what about Ashok Leyland? It came out with better than expected numbers. The last month sales numbers were also good. Still, the stock's very close to 52-week lows, and that rally was sold into.
Anuj, I think that actually the problem was seen more for FY21 guidance, and sometimes I don't understand what was the necessity of the company for the company to give the FY21 guidance where they have said of the single digit growth or maybe 10% growth, because when the interim CEO, because he will eventually, when the new CEO will come in and he will take the call on the stock, and if you really take a call, if you personally ask me, if I focus only on 2019, no point in taking a call from 1st April 2020 post BS6 introduction. What will be the situation thereafter? Definitely that will bring down the sales. But can you take a call for next 24 months when you have the visibility, growth visibility seen for next 8 or 9 months? Because I'm quite hopeful that pre-BS6 introduction from 1st April 2020, you will be seeing the good amount of sales happening in the preceding quarter, that is starting from December to March, and that itself is enough. And in fact, the January sales numbers have seemed to be quite good. In fact, we'll keep an eye on February, March also. I don't think that, and with the financing position seen having eased out, the situation is looking not bad, so bad on the LCV and heavy commercial vehicle fronts. So we are keeping positive view on the Ashok Leyland, and more especially after having seen the margin expanding to 10% plus for the Q3 numbers on the lower sales for that quarter as well.
Okay, Mr. Tulsian, we'll thank you on that note. We, of course, will touch base with you in the afternoon on closing bell. For the moment, well, markets are looking a little bit in the green. Let's see how things pan out. There is an over 10% gain in all the ADAG group stocks. Rel Cap is up 10%, but so are most of them, including Relcom. But over there, the difference is just about 50 pies. It's more prominent in Rel Cap. Rel Power, all those stocks also a little higher, about 8-9%. But in all those cases, it's more like 1 rupee or so. We'll come back and see whether this is sustainable, the lenders pledging not to sell the pledged shares. But the important cue today that's negative for Indian markets is the bullishness in crude prices. Manisha Gupta joins in to tell us all the other cues from the commodity space. Morning, Manisha.
Morning, Lata. Thank you for that. Well, yes, we have seen a 3-month highs on the Brent crude oil prices. It's hit a high of 66.78 as well in the earlier Asian markets today. So very strong gains, and we are holding almost 22 to 25% up for both the crude varieties for 2019 already. It has to do with the long positions that the funds have been creating. Banks have been bullish as well. And then the fundamentals have turned for the better. You are looking at the OPEC-led output cuts finally showing into the levels. It also has to do with the sanctions on Venezuela. And the US and China also, there is an expectation that they will reach a resolve on the trade concerns. There is a statement from Beijing saying that there is a consensus on major key issues between the two countries, and that seems to have led into some risk appetite as well into the markets. But not just crude. If you look at the other industrial metals, like rubber prices are trading at a 3-week highs in the global market. The base metal prices gained between 1 to 3% on Friday and seem to be holding well in Shanghai right now. It also has to do with the Chinese data, where we did see the trade numbers come in very positive. Also, the lending numbers for the month of Jan are at the second highest record at around $458 billion for that month alone. So the stimulus measures that China had put out actually seem to be showing into the economy right now, and that has been quite positive for many commodities.
All right, Manisha, thanks a lot for that update. Uday Mukherjee is now joining us. By the way, the pre-open has settled 14 points higher on Nifty, and because of Yes Bank's impact, 40 points down on the Bank Nifty. Uday, good morning. Your thoughts first on Yes Bank, because a lot of people are wondering, what exactly is happening here. There was that zero divergence, of course. The stock rallied 30%. Now the RBI is not happy with the communication, and of course the stock's down 8%.
Well, one thing is quite clear, Anuj, that the Reserve Bank of India hates the guts of the Yes Bank management. And I mean, you can see the displeasure written very large on the communication which has been coming out from the central bank. Now, none of us know what the other irregularities are, and on that will hinge whether Yes Bank plunges once again below 200 and stays there, or basically floats around here after the pullback, smart pullback rally of last week. But, I think the Yes Bank management has done enough to prove to shareholders that it's not really a blue chip management. The nature of disclosure, the haste in announcing non-divergence at or loggerheads with the RBI rules, I think all of this leaves a bad taste in the mouth. The only thing which is the saving grace is that the entire market was short on Yes Bank. Some of those shorts have covered up. And all the brokerages who've got the Yes Bank stock terribly wrong over the last 1 year have all come out and proclaimed victory, saying, we told you that it's actually a good company. So I don't know what to do with the company now. It depends on the nature of disclosures which will now come from the Reserve Bank of India on other irregularities. But for really long-term investors, I would say that other corporate banks make a lot more sense than this one.
Okay. Well, I just want, good morning, Uday. I just wanted to say this in favor of Yes Bank, that, you know, all banks get a large RAR report, risk assessment report, and it has a whole lot of things, you know. Why didn't you appoint your IT officer, and why does your board not have a representation of this kind of a person? Why are you one short on your board member? Your cyber security is negative on this issue. Your fees charged on this is not up to the mark. You know, it's a large thing, and everybody gets this report. It's just that divergence, the Reserve Bank asked them to report in the annual report, and SEBI told the companies that you have to report it in the next result itself, P&L. So now Yes Bank has a quandary. Should they wait for the next result? It is 90 days away. Until then, what do you do when you meet investors and they ask you, is there divergence? Should they keep quiet? So there is a little bit of a quandary even from Yes Bank's point of view. Well, I'm just trying to present the point of view of the underdog at this point in time. But separately, I wanted to ask you also about generally the debt market problem. You know, you look at the pledged, the undertaking that ADAG Group has taken. Before that, it was Z. And anybody in the market will tell you that liquidity is hard to come by. Every NBFC is sitting on 3 times the cash they were sitting on a year ago or 6 months ago. Where is all this leading? Are we going to see a big fall because of this?
It's tough to say, Lata, how this will end, but liquidity is indeed very tight, and NBFCs are very, very skittish at this point in time. So, you know, they don't want to be holding on to lemons and find out later that something was wrong. And there have been instances of haircuts which NBFCs, mutual funds, debt mutual funds have had to take in 2018, and significant haircuts too in 1 or 2 instances. And you can't blame them for actually liquidating paper of groups which they don't consider financially sound enough. Now, that's a matter of debate between the ADAG group and the mutual funds of the NBFCs on whether it should have been sold down or not. But you cannot blame NBFCs at this point in time to act in preservation of their capital as they see or as they deem fit. And I think this kind of risk-averse behavior will only grow with the passage of time in 2019. And you may even see more instances of many mutual funds selling down a lot of this paper which they don't consider kosher. So I think there will be more accidents down the way, and it's better that these accidents lead to stock price collapses rather than debt funds taking big haircuts for mutual fund investors. I would rather plump for investors actually having their principles safe rather than promoters actually seeing the false cushion of their stock prices floating at reasonable levels when their businesses are actually less than reasonable.
Okay, let's do one thing. Then stay on. We'll just take 9-10 calls and then get back to you, Ashwini. What's your 9-10 call?
See, Reliance is a buy with a stop of 1230, target of 1265.
Okay, Sudarshan?
Well, look at HCL Tech. That's a safe haven. Buy it with a stop at 1040 and a target of 1080.
Okay, and finally, Mitesh?
I have sell on Godrej Consumer. Keep a stop at levels of around 681. Look for targets close to about 645.
Okay, we just have about a minute and a half left before the markets open. Udayan, hi, good morning. You spoke about stocks like Yes Bank, but what about these other haloed, so-called haloed stocks that have fallen quite a bit? I mean, Page Industries, for example, it's down 40% from the top. What do investors do here?
It's not a bad sign, you know, Sonia, actually, in my book, the fact that high PE stocks are falling now. I think when this market has to bottom out, my sense is that it will bottom out with a last fall in A, blue chips, B, high PE stocks, and 3, some consumer names. The day you see consumption correcting, I think I would say that we are very close to the market bottoming out, because those stocks have not corrected. And in any case, you look at the market structure right now, people are very, very leery of companies with high PEs, like you've had that experience earlier with the haloed Avenue Supermarts, now Page Industries, United Breweries. So I think it's a good sign that some of these things are happening, that high PEs are contracting towards the end. See, the mid-cap, small-cap damage has happened already. How much will you flog that dead horse? Maybe a little bit more. But a large part, not a large, a significant part of the large cap market, which is about 15-20 stocks, are still trading at very lofty valuations. Consumption is not corrected. At a time when mid caps are collapsing, stocks like BATA are hitting 52-week highs. I think the consumption end of the market, when it realizes that we probably have a consumption-led slowdown coming next year, that might correct, and that might be the last leg of your correction.